Alright, so we have some more numbers now from Tech Mahindra. Consolidated total income at 5488 versus 5388. Consolidated net profit at 720 versus a poll expectation of 729. We also have Sandip Agarwal, Vice President Capital Markets at Edelweiss Financial Services, joining us with the first take on those numbers. Sandip, what are you picking up?
So I think the numbers are definitely looking better than expectation, because the dollar revenue growth expectation was somewhere in the range of 3.6 to 3.8%. But the actual numbers are looking much better than that at 5.2%. Similarly, on the EBITDA margin front also, there is a slight bit of surprise from 19.7% expectation to 20%. So I would say that these numbers are definitely better than expectation. Also, 3 large deal wins have been announced during the quarter. Given good Europe exposure, the expectations were also low because of significant cross-currency impact which was witnessed in case of TCS and HCL Technology. So to that extent, these numbers are definitely much better than, I would say, expectation on the revenue front. Although on the PAT front they are in line. So we have to obviously look into more detail what has happened, but possibility of a forex impact is there.
All right, stay with us, Sandip. I'm also going to get in a view from Ankit Pandey of Quant Broking. Ankit, numbers also looking better than expected to you?
Yeah, we had expected a very similar growth as to what they delivered.
Okay.
It's right along line, and the margins also, our expectations were a little bit higher than the street. We were expecting operating margins of 17.7%. I think they've come only slightly below that.
Yeah, 17.4 is the consolidated.
Yeah, so I think this is the kind of bounce back we expected from a very poor Q1 margin. I think the margin in Q1 was down 310 basis points because of utilization, because of visa, some mix deterioration, and utilization drop of 200 basis points would have eaten away a good 100 basis point margin last quarter. So I think this kind of bounce back should be expected, and this should keep I think most of the earnings consensus, etc., pretty much on track. I think from
I haven't seen the utilization numbers yet, but you're attributing whatever improvement we've seen in margins mostly to that?
No, at least half of the normalization would have come through from the utilization side. Last quarter it had dipped by 200 basis points from 74.4 to 72.4. So I think we expect it to bounce back by half that amount this quarter. So that would be part of the mix there, but also visa costs were there. There was some mixed deterioration. So these kinds of things would have normalized and should be giving a good 200 basis points relief on the margin this quarter, and that has pretty much come through, I think, this quarter.
All right, gentlemen, we're going to leave it there. We'd like to talk a little bit more about Tech Mahindra, but we have the Dr. Reddy's management with us.